Hello, Luke. Nice to have you with us today.
Thank you, Etis. It's great to be here.
We usually go into the backgrounds of our guests, but today I just really want to know because you have a background in Web 2, you have a background in Web 3 as well. And what's fascinating to me is that quite a lot of builders throughout their careers, they did pivot from Web 2 to Web 3. Not all of them stayed, but you're one of them who stayed. So I want to know what pushed you from Web 2 to Web 3 and why did you decide to take this step? Because everyone knows that Web 3 is way more chaotic than Web 2, right? Like, why did why did you decide to leave that comfort and then basically try something in Web 3 in this industry that no one knows what's going on?
Great question. 10 years ago, I was actually working at Amazon Web Services and I was a principal engineer there. So I helped a lot of Web 2 companies, a lot of startups, a lot of big companies adopt cloud. And that was really passionate. I was really passionate about cloud in the 2010s. A lot of us were adopting cloud and helping startups build on the cloud. And it was sort of an accident that I ended up in Web3 because I was an early Bitcoiner and I was early to Ethereum, but I was mostly just experimenting with it. And my brother and I started building proof of stake infrastructure back around 2016, 2017 timeframe. And in 2018, I helped the Tezos Foundation launch their network. Maybe you're familiar with Tezos, one of the first proof of stake networks. And that really brought me into crypto for the first time. I actually, did some consulting work, helped them build all their validator infra on AWS. And ultimately, about a year later, after launching the Tezos network, Coinbase decided to hire me and help them build out staking rewards at the Coinbase. So that was kind of my jump from Web 2 into Web 3. It was sort of an accident. I had never done anything professionally in crypto until about a decade ago, and it was pretty fun for me.
As an infrastructure engineer, the way that you build smart contracts, how different is it, for example, with someone who started as a Solidity developer?
Yeah, great question. So, I've always been pretty deep on the infra side. Building a lot of container systems, using Docker, using Kubernetes, technologies like that. And that was, my first foray was really running nodes. How do you run blockchain nodes? Whether it's a Bitcoin node, an Ethereum node, and or a Tezos validator node. And I brought that expertise in, my brother and I started hacking on smart contract systems in Solidity in the early days, 2016, 2017 timeframe. But we never really made a full application at the time. It was still pretty early. We wanted to build things like decentralized exchanges, but it was still pretty early, and I was more infrastructure heavy, whereas my brother was more software heavy. And so when we started working on Tezos, it was a really good combination because he could build, some of the monitoring systems. I could build the low-level node infrastructure, and then as I kind of transitioned into Coinbase, having that mixed skill set of like deep infrastructure on the node side, but then also, having the ability to go up the stack and work at the smart contract layer, that really helped a lot. The biggest project I was working on at Coinbase in 2020 was launching the Ethereum beacon chain. This is when Ethereum transitioned from proof of work to proof of stake. And a big part of that was, figuring out how to create validators. You have to basically send 32 ETH to the staking contract, and that creates a validator on the beacon chain. And so figuring out how to orchestrate thousands of validators, and then using low-level infrastructure providers to run the nodes for us was a bit of a leap. We were originally running all of our own proof of stake nodes, but as Coinbase grew and they acquired Bison Trails, which was one of the largest staking companies, we were able to leverage the Bison Trails node infrastructure and other node providers globally to kind of make sure that the infrastructure was really solid. But it's always been, I would say, it's always been a really good skill to have to understand how proof of stake works at a deep level and how the layer one secures itself, and understanding things like reorganizations of the network, how that can impact your application as we moved into building, decentralized apps on top of Ethereum, like Moonwell.
Yeah, and I agree with you. And what many DeFi builders tend to not take into account is that they have to take some sort of retail lessons. For example, in your case, you took maybe retail lessons from Coinbase, and that led to Moonwell's user interface being a lot cleaner for them, for example, your competitors, right? And now, since we're still speaking about Coinbase, if I'm not mistaken, most of the TVL for Moonwell comes from Base, and Base is incubated by Coinbase. So does this feel in a way like a full circle moment for you as well? And like, does the roadmap of Moonwell in a way depend on the success of Coinbase in onboarding their, let's say, next 100 million users?
Great question. So, yes, as I was working at Coinbase, I was there for a few years. Launched a bunch of proof of stake networks, including Tezos, Cosmos, and Ethereum. And really wanted to, I really started getting into DeFi in 2020 and 2021. I think like most of us that were at Coinbase at the time, we were, sort of all during COVID lockdown. We didn't have much to do in the evenings. And so we were experimenting with DeFi protocols like Uniswap, SushiSwap, Compound, Aave, etc. And that was sort of my big aha moment that, hey, I can not only just hold crypto, I can not only just hold Ethereum or Bitcoin as an investor, but I can also leverage it. I can borrow against it, and I can use the tokens I borrow in DeFi. I can borrow stablecoins, and I can use them in DeFi. I can become a market maker on a DEX. And that really was a big wake-up call for me, and I decided I wanted to kind of move into building decentralized applications on Ethereum. And so in early 22, I left to launch Moonwell. And, Moonwell is an open lending and borrowing app. And when Jesse and the team reached out in 2023 and let me know they were going to launch Base, I just decided we had to be there day one, and we needed to figure out a way to, make Moonwell, leverage Moonwell on Base. And, we've been on Base since day one, since August 2023, when the Base network first launched. And it's been a fantastic journey to kind of be alongside the Base team and basically create some of the best lending applications on Base. And I think, like to your question, bringing that retail user experience, one of the things that I think many of us remember about using Coinbase for the first time is that it was the first app that made it really easy to buy Bitcoin. And for those of us that were early, you kind of understood that that's how they got to 100 million retail users. And, crypto has been way too hard to use. The user experience has been way too challenging. And so I tried to kind of incorporate some of that user experience into the Moonwell application. As we build the front end, we tried to think about how do we make this easier to use so that, a normie could use it, someone that isn't a crypto person. So we've thought a lot about that. It's still not perfect, but we're trying really hard to make the user experience the easiest to use lending app.
Yeah, I mean, what John mentioned and what you just said right now, it's true. I mean, the UX in crypto is, I don't want to say this, but it's one of the worst UXs in any industry, because I've been here since 2020 and I still have a hard time sometimes when I'm using some new protocols. But what do you think you guys at Moonwell are doing better than your competitors in terms of making it easy for the average normie to use the app, right? Because yes, we know that like financial tools and financial instruments and these types of apps are more specific to a specific type of user base, let's say. But what if someone that's not familiar with crypto wants to enter Moonwell, wants to use your let's say products and services? What do you think is your upper hand in this specific case?
So we've thought really hard about the onboarding problem. How do you get someone that has never used an app before to use your application? And the first user experience is really important. So if you think about, okay, let's say you wanted to ask, a family member or friend to try Moonwell. So the very first thing they're going to ask is, well, what wallet should I use? And with passkey wallets, now we can actually support, you don't even need to download a wallet. So that's a big unlock. You can simply use your Face ID, your Touch ID, your biometric to create a wallet on your phone and then begin using the app right away. And then with the passkey wallet, you also don't need to back up a seed phrase. I think everyone that's gone through the onboarding experience with a friend has had that experience where they ask you, what wallet should I use? And then the next question is, okay, how do I back up? You say, write down these 12 words and don't ever lose them, or show them to anyone or you'll lose all your money. And then the third thing that we really tried to solve is how do I get money into my wallet? And so we use this wallet provider called ThirdWeb, and what they allow you to do is on ramp from 40 different fiat currencies. You can use a Visa debit card if you're in the United States, and you can on ramp up to $500 through this partnership that Coinbase has with Visa without any KYC check. And so that's a really simple way to go from maybe Bank of America to having $500 in your wallet on Base, and then you lending that out and earning a high yield for doing that, earning 4 to 5%. And that's a really nice onboarding experience. We tried to smooth out all those rough edges, no apps to download, no seed phrases to back up, and making it really easy to on ramp. The other thing that ThirdWeb does is if you already have a wallet, let's say you already have Ethereum on mainnet in your MetaMask wallet, or you have maybe you have something in your Solana wallet, you can easily go into Moonwell from a wallet on another chain with very low fees, just a couple cents. And they do this with a intense bridge. So basically I can say I want to deposit, 0.01 ETH from mainnet into Moonwell. And then, a few minutes later, I'll have about $20 in my Ethereum, lending out in my Ethereum position on Moonwell. And so we kind of we tried to make that super easy. And then the last thing I would add is that about a year ago, we launched a DeFi agent called Mamo that is designed for people that are brand new to crypto and have never used DeFi apps before. And Mamo just basically makes sure you're earning the best yield on your stablecoins, your ETH, or your Bitcoin at all times. And it takes care of all of the heavy lifting for you, making sure you're earning the best interest rate, compounding any reward tokens, and keeping you updated about how your position is doing. So we tried to make that experience really easy for people that just maybe want to lend their coins and don't want to do more advanced activities like borrowing or leverage.
Yeah, and I wanted to get into Mamo, but before we get into Mamo, I wanted to ask a question about the governance aspect of Moonwell. It does include compliance setups like KYC and AML, which is tied to certain grant processes, right? So I guess my question is, how do you defend that to decentralization purists, or on the other hand, how do you defend the decentralization aspect to people who are more compliance-minded, to partners that are more compliance-minded, if that makes sense?
Yeah, so Moonwell is stewarded by the Moonwell Foundation, which is a Cayman foundation. And basically, if you think about compliance, companies that receive grants that, do work for Moonwell protocol, they do need to be KYC'd for anti-money laundering reasons, right? There's sanction screenings and things like that, but it's generally a pretty lightweight process. Just requires a couple days to make sure that the wallet that the receiving funds on isn't sanction screened. But the way that the protocol is governed is by the well token holders. So, token holders have to vote for a grant, and also any upgrades to the protocol have to go through governance. So the governance aspect kind of enforces that decentralization at the protocol layer. And then really the KYC AML sanction screening, that is really just done so that the Moonwell Foundation can stay safe and make sure they're not sending money to sanctioned individuals or entities. But that doesn't prevent, anyone in the world from applying for a grant, as long as they're not in a sanctioned country or something, right? And I think a lot of foundations are sort of set up in that way. They do have to make sure they're not sending money to bad actors, right?
Yeah, so I really didn't want to get into this question that I'm about to ask right now. I wanted to ask this question towards the end, but Dran mentioned decentralization, and we're talking about decentralization right now. And I think we really need to talk about this whole decentralization theater that we have in crypto, because it's promoted as crypto is promoted as a decentralized industry, if that makes sense. But most protocols, most blockchains, of course Moonwell has its decentralized part with governance, but most companies, let's say, don't have that. So because I'm trying to touch upon when AWS had an outage late last year, many protocols were really heavily damaged, let's say, by this outage. So What do you think is the next step? I mean, is it realistic if we aim for a fully decentralized industry, like everything decentralized, right? Is it realistic that we try to push for this DeFi world? Because in my opinion, there's quite a lot of benefits, but also there's quite a lot of drawbacks if we really want everything to be decentralized. I mean, I really want to know your opinion on this because I think you're the right guy to ask.
It's a really good question. So first of all, I think we need maximal decentralization at the protocol layer. So that means, if your smart contracts are running on Ethereum or on a layer 2 like Base, your smart contracts should be as decentralized as possible, meaning they should only be governed by, token holders, or in the best case, maybe they're immutable and you can't change them at all. So that's like a Uniswap pool. Once you create a Uniswap pool, that pool will live as long as Ethereum lives. It will live forever. And even Uniswap Foundation or Uniswap Labs can't turn off that pool. So I think at the protocol layer, we need the maximum decentralization. Where we have centralization still is at the interface layer, like the front end or the application used to access that protocol. And I think there's some benefits to trying our best to decentralize this, whether it's IPFS or some type of distributed file storage. And I think keeping like maybe a backup interface that can't be taken down by a web provider like an AWS is a good thing to have. However, I also think that there's value to be added at the interface layer, and this is where things like AI agents can come in and assist you, right, in making your life easier. And so I think that as we kind of like mature into a more, as crypto becomes more widely adopted, I think that there will be a lot of companies like, the Uniswap Labs of the world. If Uniswap makes a really nice wallet that's like mobile on your phone, and that maybe has an AI agent that can help you trade, maybe they deserve to charge a small fee at the interface layer. And it doesn't mean the protocol is centralized, but it means that there's some centralization at like how users access the protocol. And ultimately, that's probably where we need to go to like to create a world where companies like Uniswap Labs and like Lunar Labs, my company, can kind of build useful things on top of these decentralized protocols. And then I think ultimately it would be nice to be able to decentralize the interface layer, but it's probably not 100% realistic just because every government in the world has different laws and different rules about what is allowed.
Yeah, now I want to go back to Mamo. And I'm all about on-chain AI economy, and I'm all about making the user experience seem seamless, and so that the average normie can just hop in and start, let's say, earning or trading or whatever, so without having to learn the 101s of blockchain and how everything works, which we had to do 5 years ago. But I always ask these questions. Do you think that there are trade-offs that come with this simplicity? I mean, maybe not on the security level, but on the education layer that users may need to have at some point in the future. And given that we're talking about financial agents, if you had to, for example, articulate some sort of a Hippocratic oath in a way, so what are like some non-negotiable principles that you would enforce at the contract level?
Really good question. Yeah, we should have a Hippocratic oath or some kind of a ethics oath for agents, because I think if you've experimented with new things like Claudebot, OpenClaw, you've seen that a lot of people are spinning up agents now that attempt to trade and make money, and a lot of those agents are losing their private keys because they can be socially engineered into losing their wallets or giving them out to someone on the internet. And this is a big problem we tried to solve with Mamo. We developed what I think is the first smart contract system that's fully audited, where the agent can't control your wallet directly. So basically, the agent just deploys a contract. Your wallet is the owner, and only your wallet can deposit and withdraw. And then the agent has really limited permissions on that contract. It can move you between various vaults and markets to make sure you're earning the best rate. It could compound your rewards by initiating sell orders on CalSwap within a certain slippage tolerance you set. But the agent has very limited permissions so that it can't be tricked into losing funds. And I think that most agents need to have this, these guardrails, like, can't lose funds versus I hope it doesn't lose funds. And that's what I think is going to be, a big a big challenge for people to build. So it's one thing to build like an agent that can lend your coins out and earn interest, earn yield, but it's quite a lot harder to create a trading agent that doesn't get tricked by other traders. People are pretty sophisticated, and maybe you can trick that agent into buying low quality coins because there's a lot of bots on Twitter pumping them, and that's sort of a challenge to solve in and of itself. The way I kind of think about solving for the average person is that, like you said, there's an education problem. People first need to gain financial literacy, and so that's one thing the agent can help. It can be a tutor to help you like understand, where does the yield come from? Oh, it comes from people borrowing against their Bitcoin on Coinbase. How do I so first understanding, hey, lending is a really durable use case where you can earn real yield from borrowers. But then understanding, okay, I want to get into trading. How do I construct a portfolio that will help me achieve my goals? Well, what are your goals? Are you going to trying to save for school? Are you trying to save to buy a house? And then what's your tolerance for risk? And I think that with these with the new tokenized stocks, tokenized real world assets, this is going to be really powerful because your agent can kind of work with you and figure out what's the optimal investment portfolio. Maybe it's a basket of like tokenized stocks. Maybe you want to have some tech stocks so that you can kind of be a part of the AI revolution and be invested in that. Maybe you want to have some Bitcoin, some Ethereum in your portfolio, and the agent can ultimately help you construct a really well-balanced portfolio and help you, remind you to save, remind you to invest, and also rebalance your portfolio for you between those tokenized things that you've decided you want to be a part of it. So I'm pretty excited about like the ability to kind of help everyone learn more about how to invest, how to dollar cost average, the tricks of gaining, kind of building and growing your wealth. I think that's a pretty powerful thing that agents can do.
I mean, this whole idea of AI agents acting as assistants is something that's super surreal to me. I've been thinking about this whole concept ever since I was a kid, and now it's becoming a reality, and I think it's amazing. It's just amazing. But like you mentioned, Mamo, and what you guys are doing to limit the, let's say, percentage of socially engineering attacks and everything else. But like, what's next for Mamo in your opinion? What do you want to do for Mamo next? What's the next step that you guys will take?
Great question. So we're going to just this week or next, we're going to be launching the ability for Mamo to be installed directly to your home screen and to called a progressive web app, where you no longer need to use Telegram to chat with Mamo. You can already chat with it directly in the app, but you'll be able to just use it as if it were a mobile app. And so it'll support iOS, Android, and web. And I think this is a big part of, we need to make these agents have more like a native app, or even like a, built directly into your phone in some kind of like, maybe you're chatting with your agent through your earbuds. So having that experience of just being able to use the app without having to be like on a desktop web user, and just not requiring things like Telegram to chat with their agents is pretty important. And then the other things we want to build in the coming weeks and months are basically some additional capabilities. So building borrowing into the agent. Right now it's just lending only, but building the ability to borrow. We also are going to launch a Visa debit card for the agent so that you'll be able to load the card from your portfolio. So you can just say, load $20 onto my card, and the agent can kind of take care of that for you. And then as we integrate more fully, I don't know if you've seen some of these companies like Ondo Finance that have recently launched tokenized equities across Ethereum and Solana. We want to give the agent the ability to start building those baskets of portfolios. And so that way you can say, you can just buy, $100 of the top 10 AI tech stocks on the NASDAQ. And, with tokenized equities where you can just buy like $100 of NVIDIA or something like that, you have the ability to actually, become more like a real robo-advisor. And so I think that's sort of, those are some of the things we want to build into the Mamo application. It's not just lending and borrowing, but also kind of becoming your financial everything app eventually.
Yeah, and it's pretty exciting times ahead. And I mean, I think it's still quite early. I myself envision a future where every single person will have his or her own AI agent to do trades for them, tailored to his or her risk tolerance and needs and whatever. Because I mean, no person is the same. Like no chain is the same.
Mm-hmm.
Each chain differs. And now this brings me to my next point, which is have you noticed differences in user behavior, for example, between a Polkadot user and a base user? Because if I remember correctly, you guys were quite a big fish on the Moonbeam and Polkadot pond, right?
That's right. We were the largest lending app on Polkadot for quite some time when we first launched back in early 22, and I think that it's what we've just noticed is that there's way more user activity and way more smaller retail users on the base network. So, for example, a lot of the people on Polkadot network were like early crypto people, and it's definitely skews more towards European user base. Whereas since we launched on base, it's a wide variety, mostly U.S. users. Like 90% U.S. users, because you're kind of reaching out to more Coinbase user persona, and then. The nice thing about, sort of layer 2 versus layer 1 is that you have really low transaction costs. And so, less than a cent for most transactions. So people are able to just invest small amounts, like $100, a couple $100, a couple $1,000. And you don't have to worry about, those like, paying a few dollars for gas. And so that sort of skews our user base towards a lot more smaller depositors. Instead of having like 5,000 hardcore Polkadot users, having 250,000, everything from minnows to whales on the base network is sort of kind of the way the user breakdown is.
There was a time I was very heavily only on Solana, like a couple of years ago, and my entire Twitter feed was full of degen stuff. And then for a brief moment, like a month or two, I pivoted into base. And like the entire feed was very wholesome and very supportive. So like just in terms of marketing and just in terms of social media posts, you could tell the difference between user behavior and so I would assume that there would be differences in how they approach trades, for example, and everything in between.
Yeah, for sure.
Yeah. Yeah, and like since you guys are talking about different chains, different regions, user behavior, and everything, I really wanna again have your opinion on the U.S. and Europe because we're moving. I mean, crypto is moving pretty fast right now. I think it 10x its speed in terms of mass adoption at this point. That we're also. I mean, even though we're in a bear market, builders are building. So, my question to you would be: where do you think the U.S. and the EU will be in the next, let's say, 10 years in terms of building, right? In terms of decentralized infrastructure and decentralized finance, and what will be the differences between the US and Europe? Again, in your eyes, and as an expert in infrastructure, crypto building, and building in Web 2 as well. I mean, I really want to know.
It's hard to predict, but I do think that you're going to see more and more of the large banks in the US integrate with DeFi. And a big part of the reason is the Genius Act that was just passed last year. So that makes it legal for banks to hold stablecoins. And all the big banks have announced they want to launch their own stablecoin, or maybe they'll use Tether or Circle, USDC. And that will mean that stablecoins will be very heavily integrated into the financial rails. The reason why the banks love this is because, you give them $1, they give you a stablecoin, and they can earn, a few percent just buying US treasuries. And then you just get a stablecoin that you can, send to your friends, like as easy as using a Cash App or Venmo or PayPal or something. And so, the banks love it because they'll get, trillions of dollars in deposits they can earn money on, and all they have to do is give you a stablecoin that maybe doesn't even pay yield. So I think that in Europe it's less certain because while there are some like euro-backed stablecoins, there's not as many, and it's not nearly as much circulating supply. And it's unclear to me if the European banks will integrate stablecoins as much because there seems to be maybe Europe has more of a fear of crypto. And so I do think that this means, so for example, today you have these, they're called Euro dollar banks, where it's like they hold all the Tether reserves, these large European banks. but you have to have like $1 million US to open an account with them. They're made for like businesses in Europe to accept money from American companies. If you're selling goods and services to America. I think those Eurodollar banks may grow, and they're gonna, because they'll have like a lot of stablecoin stuff happening with them. But I'm just more skeptical about like the EU or the actual euro backed stablecoins. I'm just not sure if they're gonna be as successful. And then of course there's a whole like China will probably have some central bank digital currency as well. But I think that I think it will be kind of cut off from the rest of the world, just because people don't want to transact in the China central bank digital currency.
Yeah, I think China has been testing digital yuan for a few years now as pilot on the different regions. So we're closer to the dystopian world than we think.
Yeah, I'm not sure I like a government CBDC, whether it's US or China, because if they don't like something you're doing, they just zero your bank account out, right? It seems bad.
Yeah. It is probably.
Yeah, but still, Europe is even worse. I mean, I've done my fair share of research on RegTech and compliance, and it's insane. For example, in Europe, sometimes it takes up to 18 months until a law is finalized. For example, something related to technology, AI, or whatever. Whereas the rest of the world moves on; they already implement them and already like. That same approach should be in Europe as well. You implement first, and then you regulate based on what you can, and not hinder innovation whatsoever. But at the same time, for example, in the US, I agree with you. We will see all of these major banks integrating crypto, blockchain, stablecoins, because they do already have the licenses to operate, for example, as banks. And but this may be a bit unfavorable for smaller players or startups that wanna start their own, for example, platforms or protocols or whatever that can compete and aim to, in a way, replace maybe banks. But anyway, that's just my take. Now I wanna ask you about. I'm aware that this might not be might make a bit uncomfortable in a way, because I know the Oracle discrepancy that happened in November 2025. And as an engineer, I wanted to ask you, like, what did that moment teach you about maybe the limits of relying to third-party oracles, and how has Moonwell evolved its approach since then?
Great question. Yeah, Chainlink is one of the best price feeds around, and they've been really solid for years. And the Chainlink events that happened in October and early November were pretty shocking and surprising, I think, to a lot of the industry. In fact, I believe over 30 different lending protocols across all different networks, including really big ones like Venus on BNB chain, took on small amounts of bad debt due to inaccurate price feeds. And I think we learned a few things from that. First, we learned that volume weighted average price, which is sort of the way that Chainlink works, and historically that's been a really good measurement, is volume weighted average. You basically use the price that has the highest volume of trading happening. That kind of broke on October 10th because Binance had like an issue with their automatic deleveraging, their ADL. And so they were doing way more volume than anyone else. And they were also liquidating loans at a really lower price than almost any, or liquidating margin at a lower price than it was trading for on the DEXs. And so what we learned from that is that we can't always trust, the volume weighted average price. And so right now we're researching things like a DEX price anchors, so that if the DEX is selling a token at 60 cents and the Chainlink price says it's 30 cents, we should fall back to the DEX price, because that can result in people creating bad debt in your protocol. And the good news is that it was just a couple $1 million worth of bad debt created in the Moonwell protocol, so it's something like 1% of TVL. And we've been able to already repay about just under half of that bad debt through protocol reserves. And then the rest will be paid off soon. But we're also looking at another thing we've already implemented just since then through governance is we've switched some of the liquid staking tokens, specifically the Rocket Pool, RS ETH, the KelpDAO restaked ETH. We've switched those to exchange rate price feeds so they're less subject to manipulation. I think that the lesson learned was like the confluence of a few events. Number one, Balancer protocol got drained through a vulnerability, and then number two, Chainlink using the Balancer pool as like their primary data source for on-chain price. That led to the November incident, and so there's a lot of lessons learned. I think both on the Chainlink side and on the Moonwell side. But I think the main one is that like we have to kind of trust but verify a little bit. Like we can trust the Chainlink price up to a certain extent, but if it starts to deviate too much, we need to fall back to like what is the real on-chain price? Like where is this trading at on a DEX? That's a big lesson learned, I think, and I suspect we'll see a lot of upgrades to other protocols to kind of incorporate some of these safety mechanisms.
I love I love what Chainlink has been building in the past few years, and I know other Oracle providers and have been doing so as well. But one of the main questions that I've had in my head for quite a lot of months now, because I did do some research on oracles and how oracles work and how price feeds work and everything in between, but like I don't see that much competition happening between oracles in crypto, and I think that's a big issue, because if there's no competition, then it's either monopolized or there's no innovation happening whatsoever. I know Chainlink has been building really, really fast, and they're having these institutional partners as well. But like, do you think we need like this? Like, why don't we have like a way to have and use 5 Oracle, let's say, for one specific price? Like use Chainlink and like 4 other Oracle companies. If you get what I mean, because I'm a normie when it comes to this type of infrastructure.
It's a great question. I think it would be awesome to be able to diversify across Oracle providers, between like Chainlink, Pyth, Redstone, others. And I think that will eventually happen, but it can be challenging. I do think, for example, Redstone is giving Chainlink some pretty good competition now. However, they still have the vast majority. 90% of all the protocols probably use Chainlink as their primary feed. I think so. Some of the challenges are just like, if you average the price across multiple oracles, which one is right when there are outliers, when they disagree? Which one do you fall back to? And I think there's some questions there. And already at the Chainlink level, like they already have, dozens of node operators, and they kind of, each one of those is using like different data sources and different, like Amber Data and other data providers. So they already have pretty good diversification at that level. But there are times when, like 1010 taught us, that there are times when everyone is wrong almost, or like, the majority of the node operators were printing the wrong price for a few of the coins, or the coins that were traded on Binance, basically. And the reason why we knew it was just the coins traded on Binance is because, for example, like Morpho, Aerodrome, and Virtual were three collateral assets that were traded on Binance, were impacted, but Well is not traded on Binance, and so it wasn't impacted. So you can kind of see that the tokens that were traded on Binance were the ones that were mispriced on 1010. But I think that all the Oracle providers need to get better at how they source data. And then you're right, you're absolutely right. I think that would be a great feature to have, is like to have some aggregator that like aggregates all the prices across multiple Oracle providers, right?
Now I wanna 180 the episode of it. Yes, oracles and projects and etc. They need to do better in terms of obtaining and sharing that data, but at the same time, the communities need to do better. Like we've seen crypto become much more institutional in the last couple of years. So I want to hear your take. Do you think that there's any part of the crypto culture that should be removed in a way? And if so, what should be removed? I mean, yes, you could make the case that the whole degeneracy aspect of crypto should be removed, but at the same time, that's what makes us authentic in a way.
Well, I think that in general, there's just because traditional finance and banks are adopting crypto doesn't mean that you shouldn't still be able to trade meme coins or whatever. And I just think that, there are different types of assets that are interesting to different people. Some people like trading prediction markets. Some people like trading meme coins. Some people like trading, stocks on the NASDAQ or whatever. And so I think that, we shouldn't, my philosophy is like we shouldn't judge what people do, as long as it's not illegal, like it's not, as long as it's not like a scam or a fraud, we should let people trade it. And now that doesn't mean like, you know, you're going to go trade it on your like stock, you know, like your brokerage, like your Charles Schwab account or your E-Trade account. But you know, Coinbase kind of has that philosophy, and I kind of agree with that philosophy, that it should just offer everything that is legal to trade and not make judgment about like, oh, that's not a good thing to trade, or that's a bad thing to trade, because ultimately like people will figure out a way to trade those things. You know, if you can't trade them on Coinbase app, you're going to trade them on Binance, or you're going to trade them on, you know, Hyperliquid or some other platform that has those things. And so if we want people to be you know, safe and not get ripped off, we should encourage like the more reputable players, like, you know, the Coinbases, the Robinhoods, etc. of the world, to let them offer all those things, because then you know, at least you know you're not going to get scammed. You're not going to lose your money. You might lose your money because you made a bad investment, but like that's on you. And you know, not treat people like children. You know, let people decide like, hey, what do I want to invest in? Because I don't think anyone knows like what's a good investment or not. And a lot of like the American banks are really bad at this. You know, they're like, oh, you can't trade crypto. We don't want to allow it because we think it's a scam. I even switched my account. Like one of my retirement accounts was at Vanguard, and they wouldn't let people buy the Bitcoin ETFs for a long time. And I switched my money over to Fidelity because I was like, I don't want to keep my money here if you won't even let people buy Bitcoin ETFs. And they lost a lot of money because they lost a lot of customers. But I think that we need to move away from that. Like, don't treat people like kids, you know, let them invest in whatever they want.
Yeah, I agree with all the things that you just said. Now, when I was doing my due diligence about this episode, I did find something, so I wanted to double check with you. Is it true you play the saxophone?
Yes, I do play the saxophone. I don't practice as much as I should, but I was playing all through like high school and college. Yeah.
That's amazing. I mean, I play the piano myself.
Nice.
I'm not that great of a player, but like I find it very refreshing, and it helps me sometimes even when I'm stressed to unwind and basically put my thoughts in order. So I want to ask you, has that in any way helped you in terms of the decision making of whatever you've been building, you know, from the engineering side and from everything in between? Yeah,
music is an awesome way to kind of unwind, to kind of like clear your mind, to just focus on something besides work, right? And I don't, like I said, I don't practice as much as I should, but I try to practice once every week or so. And it's a great way to relax and just like have something that isn't crypto you're into. Yeah. Everyone should have a good hobby like that, I think.
Yeah, unlike you guys, I don't play any instrument, and I don't even have an ear for music. Like, I love listening to music, but I just don't. I cannot not make music of any kind, right? That creative side of me is the worst. So, yeah, to wrap it up, I really wanna talk about Moonwell again, and my question to you would be: do you think of Moonwell as, let's say, the liquidity haven in the next 5 years? Let's say, do you think that you guys will be, let's say, the center of like lending, borrowing, and everything in between?
Great question.
Yeah, and to add to that question, to make it a double question in this case, what besides, for example, metrics like TVL and all that, what would you measure success with, let's say, in 5 years? What's the end game for Moonwell?
So I think that great questions. We would love to expand and become not just one of the central liquidity hubs on the Base network, but we're also planning on expanding to Ethereum mainnet this year. And as you probably saw with Vitalik's recent post, we think that as mainnet scales, basically it's going to become the center for all of the DeFi liquidity, all the on-chain liquidity, and not just Base, although Base is going to grow to probably, you know, trillions of dollars of stablecoin activity, and it will have its own liquidity hub. But we want to be really a compelling, attractive base layer for lending and borrowing against real world assets. And so I think the way I would measure success is as stocks and equities get tokenized, as real world assets like precious metals, gold and silver, and all, you know, bonds, treasury bills, corporate credit, all of these things get tokenized, we want to offer lending against all of the best collateral assets, whether it is, crypto today or whether it is real world assets and stocks and treasuries and everything else tomorrow. And we think that this is a really huge opportunity for us, because it will democratize not just the large like hedge funds and financial institutions, get not just them, because today that's basically the way that the traditional finance world works, is only the really wealthy individuals or hedge funds can borrow against their stocks and get margin. But we think that Moonwell as a base layer will allow pretty much anyone, whether you're a small retail investor to a large hedge fund or institution, to borrow against the real world assets and just leverage them to do more with what they have. And that's what gets me really excited, and makes me excited to wake up in the morning and work on Moonwell every day, is that we have this opportunity in front of us to become this base settlement layer. We've already proven we can have the best collateral assets on base network, and we're going to expand that to mainnet, and we're really excited about these real world assets and tokenizing everything. So I couldn't be more bullish about that trend in the coming years. And the way we'll know we've succeeded is if we have if we can grow to billions of dollars of collateral and billions of dollars of loans and hundreds of millions of users.
Yeah, I agree. Like crypto should be about converging the classes, right? I'm not saying this because I'm part of the lower class or anything like that, but that's the whole point, right?
Yeah,
exactly.
All right. Well, Luke, we thank you so much for your time today and for joining us. It was an amazing episode, and we will try to be. I don't know if you're going to be in Ethereum FCC in late March. But if you will, and if we will, we should definitely have an on-site episode there as well. A physical one.
That sounds great. I think I'm going there. I'm a speaker, so I should be there. We should meet up.
Perfect. And I don't know if I can take my piano, but take your saxophone and let's see if we can come up with something.
Sounds good. All right. Looking forward to it. Have a great day, guys.
All right.
all right.
Thank you, Luke.
Thank
Bye-bye,
you.
Luke. Thank you.
Well, yes. It's all about affirmations. I'm affirming that we will be in LCC. Let's pivot a bit into Ethereum, right?
Yeah, I mean, I love Solana. I love Ethereum as well. I love crypto as an industry, so I don't think that should be an issue. But yeah, let's manifest the LCC. What do you like about Luke? I love
Very,
simplicity.
very straight to the point.
Exactly. I was gonna say that.
No bullshit, no fluff. Like straight to the point. He really addressed every single question, like at the pain points, because you know how people are PR trained and they go and beat around the bush to, let's say, avoid maybe a more uncomfortable question. He did not hesitate at all, and that's what I liked about him. And yeah, shout out to Luke.
The guy built like backend for AWS. I mean, he built backend for Coinbase. Two of the biggest companies in two different industries,
Yeah.
if you understand what I'm trying to say here. And now he's building Moonwell with millions and millions of TVL. So if he wasn't gonna be straight to the point, I don't know who would have been straight to the point. So yeah, shout out to Luke. Thank you for joining us today, and thank you for joining us today as well to the viewers. And we wish you a very, very good day.